Is GameStop the blockbuster of video games? Are they headed for bankruptcy in 2020? They are the most shorted stock right now. But there may be one thing short sellers are overlooking that could lead to one of the biggest short squeezes in recent history. This thing just might explode. GameStop, a Fortune 500 company, is the world's largest video game retailer, operating over 5,700 stores in 14 countries, and offers new and pre-owned video gaming consoles, accessories, and video game titles in both physical and digital format. The company owns GameStop, EB Games, Micromania, Game Informer magazine, and ThinkGeek. But trouble stemming from massive high-growth companies like Amazon, who have an even wider selection, bigger inventory than brick-and-mortar stores, and oftentimes lower prices, have all but decimated GameStop's physical copy sales. Now, that's not even to mention platforms like Steam, which allow users to download games directly to their consoles without ever having to leave the couch.
So let's start with GameStop plunging after hours after a disappointing quarter. A miss on the top and bottom lines. You can see GameStop down almost 20% right now. So EPS came in at a loss of 49 cents. The expectation had been a gain of 11 cents. Revenue, not much better, $1.44 billion. The street was hoping for $1.62 billion. Comps down almost a quarter, 23.2% versus down 13.8%, which the street was expecting. George Sherman, GameStop's chief executive officer, saying in a press release that our third quarter results continue to reflect the prevailing industry trends, most notably the unprecedented decline in new hardware sales seen across the market, and perhaps even worse, they expect these trends to continue into next quarter. Looking at guidance, EPS for fiscal year 19, 10 cents to 20 cents adjusted versus the $1.21. So really not a good quarter for GameStop. And again, you can see they're down almost 20%.
Let's look at the numbers. Comparable store sales dropped by 23.2%. That means for the average store in the same location, the year previously, it was doing 23% better than it is this year. Due to the stock price decline stemming from plunging sales and earnings, GameStop's market cap has fallen to about $270 million. Meanwhile, GameStop still has $419 million in long-term debt. Now, like I said, I do see a short-term possibility for an explosion in the stock, but before I get to that, I don't want to gloss over just how bad things are. Now, recently, Moody's downgraded GameStop stock's debt rating, meaning they think it's less likely that GameStop will ever be able to repay its debt. Their reasons were as follows. GameStop's corporate family rating is constrained by its vulnerability to product renewal cycles and new technology trends that pressure the traditional sales and business model, including new gaming console launches as well as downloadable streaming and subscription gaming services. The rating is constrained by ongoing pressure on revenue and margins as the company's new video game software sales, hardware sales, and pre-owned business continue to be pressured, which will continue until the holiday season of 2020. As a retailer, GameStop is exposed to social risks such as changing demographic and societal trends, including the shift of consumers purchasing goods and accessories online. But none of this is any secret. GameStop is currently shorted 63.37 million out of its 65.92 million shares. That means that 96% of people that are involved with GameStop are hoping to make money off its further decline, rather than owning the stock hoping that it's going to go up. However, this amount of short volume means that any pop in the stock price could lead to a wave of shorts covering their positions, thus skyrocketing the share price, causing more shorts to have to stop and cover their positions, pushing the share price even higher. The way it works is when you short a stock, meaning you think it's going to go down, you borrow shares from the broker and hope to buy them back at a lower price. Now, the higher the stock price gets, the more risk it is for you because you have to buy those shares back. Therefore, any pop in the stock price leads to people buying the stock back in order to cover their short position, which leads to the stock price going even higher and thus pressuring more shorts to cover their positions. Add to that GameStop has $290 million in cash on hand right now. There is a good chance that the board will authorize a share buyback. In 2019 alone, they bought back 34.6 million shares for $178.6 million at an average price of $5.14 per share. If they issue a $175 million share buyback like they already did in 2019, with such a low amount of available shares outstanding, that alone could light the fuse. Even without a share buyback, this $290 million of cash on hand makes a near-term bankruptcy very unlikely. The new console refresh cycle will hit in 2020, its first major refresh since 2013. All new consoles will have disk drives. The PS5 is rumored but not confirmed to be backwards compatible to the original PlayStation and could be a boom for pre-owned sales. Now, overall, administration costs have been cut by the board and they've exited the Nordic countries, which should save them about $15 million a year. They also own a lot of additional assets which are sometimes looked over. They own about $50 million in real estate alone. They have a magazine with about 7.5 million monthly subscribers and a corporate jet currently for sale for $11 million. But going back to the magazine, given that Time magazine sold for $190 million with less than half the amount of subscribers as Game Informer, Fortune sold for $150 million, and even Money magazine was rumored to sell for about $20 million. Now, we don't really know what the demand for this magazine would be on the open market, but I don't think $50 million is out of the ballpark. That means about half of their entire market cap could be easily liquidated just by asset sales and leasebacks based on the current real estate that they own. Now, the biggest point is the number of shares ready to be purchased if there is a share buyback may be much lower than investors realize. With $900 million in liquidity at the end of the year, it's not hard to envision management authorizing the additional repurchases needed to break the back of the short sellers. With approximately 63.4 million shares being shorted right now and less than a couple million being available to purchase, this is a tinderbox waiting to explode. My advice is to watch very closely, and any short-term spike in the stock price is going to make me actually get in because I know a lot of shorts are going to have to buy to cover their positions and push the share price higher. What do you think? Does this make sense to you? I'm really curious to hear your opinion on this stock. Are they totally doomed for bankruptcy? I don't see any real long-term potential. I'm kind of just waiting for the short squeeze. If you like this video, then leave a like. And if you want to stay up with the latest stock market news and analysis, I do the dirty work. I read and analyze all of the financials and balance that against market trends, market psychology, and my 6 years of trading experience and deliver my thoughts to you. Please subscribe and I'll see you next video.